Let's delve straight into Naspers. We saw the stock ending down 0.7%. Of course, the overall market was in negative territory, but those results were not really taken in the market's stride. Were you impressed with those numbers, or do you think that we could have actually seen a better performance?
Look, I think it was a pretty respectable set of numbers and perhaps marginally below consensus expectations. So headline earnings up 7 to 8%. Revenues was up, I think, about 17%. And the reason for that is, or for the discrepancy between bottom line growth and top line growth, is that really there's a lot of expenses that are currently being incurred to basically grow the business for the future, really. And I think some analysts might be disappointed maybe at that, although I think they are making really the right decisions for the business longer term. So consensus expectations, I think, was for earnings to be up, I think, 10 to 15%. So you'll probably see marginal downward revisions. And the 2012 financial year will probably not be the great year earnings growth-wise that what perhaps many people had hoped for. Having said that, though, they are investing for the future, so I think the results will come through in future reporting period. The long-term investment case for the company still certainly remains intact. The pay TV business is kind of struggling a little bit in terms of subscriber growth, that has certainly slowed down, but that's mainly due to the 2011 year. That was truly a fantastic year. If you exclude Mail.ru and like Tencent from the internet businesses, that are still making losses in the region of about 400 million rand, but revenues are growing very, very fast. It's growing close to 60%. So I think that certainly does highlight the long-term earnings potential of those businesses. So I quite like it. Not too bad.
Absolutely. Let's touch on the overall market today. We're down around 0.6%, Rhynhardt. Again, very thin volumes dominating market trade, and it's quite interesting to note that the top performance yesterday actually coming under significant pressure in today's session. It's something that we've actually come to be very used to over the past year or so, but the point is that it's giving opportunities, but markets also, in a sense, not really going anywhere.
Yes, definitely. Markets are just going nowhere slowly. One day up, one day down. I think uncertainty is going to be here to stay for a very long time, and volatility as well. There's a fair amount of significant news that's going to come out in December. I think most notably we should get a slight, let's put it this way, further clarity or a little bit more clarity on how the situation in like the Eurozone is going to unfold on the 9th of December. I think until then it's going to be a very bumpy ride. I think seasonally this tends to be a strong month for the markets, and I think the positioning of investors is perhaps very cautious or more cautious than what they used to be this time of year. So I think a little bit of good news could probably cause a short-term rally, but I think the longer-term issue certainly remains. The SA market is not far from its all-time high, so I'm still very cautious, especially on the South African market.
Well, let's touch on Group 5. One of the companies also out with a bit of news out is saying that they could actually slash jobs going forward, and saying that 2012 and 2013 still look constrained, more constrained than what they thought initially. So again, the construction companies are still in the doldrums, because it's not only about Group 5. Many other construction companies have come out with the same news.
Yes, definitely. I think in Group 5's case, I think they did relatively well in the previous, say 2 years, to keep earnings relatively stable, especially if you had to compare them to the likes of Murray & Roberts that have seen massive declines in earnings already. So the key statement has, or was basically now that they suspect earnings for the 2012 financial year to be quite significantly worse than when they last communicated to the market when they reported their full year numbers. I think it was roughly about in August they gave us a market update, and it's clear that things are still relatively tough. Margins are still under pressure. The competition in the construction industry is still very fierce, and I think there's still a fair amount of overcapacity that needs to be removed from the system before that sector will actually start doing very well again. So for the likes of Group 5, I think 2012 is going to be a year of quite significant earnings decline, probably greater than 30% or so. And I think to start investing in the sector perhaps is a little bit too early still. I think investors have taken the worst pain, but it's certainly not a dripping roast yet. I think just the overcapacity has to get out of the system.
Okay, well, let's touch on BHP Billiton and Anglo American. BHP is down 0.6% today. Anglo American shed around 0.5% today. And interesting that both companies are taking very different views on diamonds. BHP wants to divest. Anglo American, of course, buying up the De Beers stake not too long ago.
Yes, definitely. I think the investment decision that BHP Billiton is taking is not necessarily because they have a more bearish outlook for the diamond market in terms of supply and demand fundamentals. I think it's just that the assets that they do own doesn't really fit their criteria to own and to operate assets. So BHP Billiton wants to own assets that are long life, low cost and expandable. And the diamond assets that they own doesn't really fit that bill. The bulk of them is, I think, in the Arctic Circle. They've been mined and explored fairly extensively, and it's a relatively small part of the overall earnings of the BHP Billiton group. So it kind of falls into that non-core camp. That a large company like BHP will be looking at it and saying, maybe it's time to hand it over to perhaps a smaller operator or an operator exclusively focused on diamonds. Will Anglo American be interested? I think it's certainly plausible because they also have assets in the Arctic Circle. I think it's called Snap Lake. So we'll have to see how it unfolds, but I don't think it's anything too sinister really. I think the outlook for diamond pricing still remains relatively robust. It's just that the assets that BHP has is probably not quite the tier 1 assets that they used to be.